Wesley Boudreau, one of the financial advisors here with the Retirement Group. They're going to do a quick update on the interest rate calculations and how they're affecting the Chevron pension plan lump sums for January, February, and March 2022. Before I get started, a quick reminder, the Retirement Group, we are an independent financial advisory firm, so we're not affiliated with, nor are we employed by Chevron. However, we've been working quite extensively for a long time with Chevron employees, helping them transition into retirement. So if you have any questions as to how these affect your personal situation or want to look at a cash flow analysis, just reach out, give us a call at 1-800-900-5867. We'll be more than happy to help you with that. Now, a reminder as far as how the Chevron pension plan works. It is a classic defined benefit plan, in which case there's a calculation to determine what your single life annuity is going to be for the rest of your life. However, if you don't want that annuity, you prefer to get a lump sum, that's where interest rates come into play. And the way that they look at it is they look at what your life expectancy is versus your age. So you have to figure out how much or how many more months or years Chevron's on the hook to pay you. Look at the current interest rates to determine a net present value of that to determine what your actual lump sum would be. So if interest rates are lower, they have to give you more to go out and try and recreate that annuity. If interest rates are higher, they give you less. Now, we've been in an interesting environment. If we take a look at this seesaw pattern, what happens is when interest rates go down, we see lump sums rise. We've seen that over the last 2 years because of the pandemic and a decrease in interest rates. However, we're starting to see those interest rates tick back up, so the opposite's happening. When interest rates go up, we start to see the lump sum fall. Now, a unique feature of Chevron, as opposed to other companies, is they look at their interest rates month by month, so you have more flexibility in when you can decide to retire. The interest rates they use to run this calculation are what are called the PPA, Pension Protection Act segment rates. There's the first, second, and third segment. The first segment focuses on the first 5 years of retirement. The second segment is for years 5 through 20. And the third segment is going to be for years 21 and beyond. So for most of us, the second segment has the highest weighting as far as the calculation is concerned. Now, the way they look at this is they go back and look at the third, fourth, and fifth prior month averages to determine what that current month is. So let me go ahead and zoom in here so it'll be a little bit easier to see. If we look at the interest rates for December, November, and October, those will tell us what the interest rates will be for March 2022. Right now, those interest rates for March will be 1.02%, 2.73%, and 3.11%. And let's focus on that middle segment, that 2.73 for March. For February, it's 2.67, and for January, it's 2.6. So again, what this is showing you is we're seeing an increase in interest rates right now from January to February to March. Now what that means is, generally speaking, we see a 1% interest rate rise. It's going to affect your lump sum by anywhere from 8 to 12%. So a quick rule of thumb is think about 1% equals 10%. So it makes the math a little bit easier. But again, everybody's a little bit different based upon their age. So in this case, if we were looking at somebody right now with let's say a lump sum of $500,000 in January, and we look at that 2.6 going up to 2.73, that's 13 basis point rise. So that's probably going to cost them about 1.3% or so in that calculation. So it could be about $7,000-8,000 or so of a reduction in their actual lump sum. So it's very important to understand this, because as interest rates go up, we'll start to see those continue to decline. So if you're thinking about retiring in the near future, it's really important to run this and be updated on these interest rates on that monthly basis, because if we see a major spike, it could be a bigger difference. I'm working actually with a client right now who unfortunately is on disability, and we're having that conversation as to, okay, how much are you losing in your lump sum calculation month by month versus how much are you getting in disability. So it's really important to understand how much that change can affect you across the board, and that's why it's important to give us a call and run a cash flow analysis to look at this as well. Now below there you see some different interest rates we posted just for reference. We look at December 2020, so about 2 years ago or so. That's where we kind of hit the low on the middle term, the second segment, where we had 2.26%. So we're not too high off of that. So we're still fairly low when it comes to terms of calculating interest rates for the lump sum. However, we go a little bit farther back, not too much farther back, in March of 2019, so about 3 years ago or so, we're at 4.39%. So if we compare March of 2019 to March of this year, we're looking at about a little bit over 1.6% change. So if we were to theoretically go back towards that level, we could see a 15-16% change in your lump sum. So if you had a $1 million lump sum right now, it could go down by $150,000, $160,000 potentially. So again, if you have questions on this, just give us a call. We'll be happy to run through it with you. But keep in mind, if you're thinking about taking the annuity, these interest rates have no bearing on the annuity. It's only on the lump sum. But again, it's important to review those options side by side so you know what your choices look like, not just now, but in 10, 20, 30 years as well. Now, if you have any questions, feel free to reach out to us at 1-800-900-5867, or you can reach us at info@theretirement-group. Or if you're tech savvy, go ahead and hold your phone up to the screen. You can actually schedule an appointment with myself or one of the other advisors with the retirement group, or you can stay updated on the Chevron changes on our LinkedIn page as well. But again, any questions, just give us a call at 1-800-900-5867. I want to thank everybody and I hope you have a great day.